Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is your weekly sector review for February 9th, 2024. Starting off with bots, the artificial intelligence ETF. This ETF did move higher and outperform the S&P 500 this week. PLTR, as we'll discuss in the best stage 2 breakouts, was the monster breakout this week after earnings, and really ignited the sector higher for the rest of the week. There was good participation across the sector. Volume could have been a little bit better across some of the individual stocks, but this is the best these stocks have acted since early in this rally, coming out of the October lows, which is actually where Palantir really got started. And then it, kind of started fading around the start of December is really where artificial intelligence started struggling. But we've seen renewed power behind the sector recently. SMCI has definitely helped too, in NVIDIA, and now that sector is starting to, show some strength, and perhaps we'll see some type of blow-off move if the market continues higher over the next couple of weeks. SMH, obviously the powerhouse of this rally, coming out of the October lows. The semiconductor stocks started breaking to new highs with no resistance very early in this rally, and that allowed them to, explode higher later in the rally, which is what they did in the middle of January when NVIDIA started moving, and then SMCI joined. There was a little bit of stocks in the sector starting to struggle a little bit 2 weeks ago, but then they did power higher. As soon as ARM earnings were reported this week, you had another monster kind of move in the sector, and ARM itself, blasted off higher. So again, this sector is now very extended from the moving average as well historically. So we've seen a monster move here. There's going to be some late chasers trying to pile into the sector, but many of these stocks and the sector itself are now very extended. So the gains have mostly been had now. There might be some additional gains in the short term, but most of the major move is likely in at this point. The US dollar, is coming off a multi-week rally still, but it's still struggling a little bit above the moving average. And again, I think this is a key market to watch, especially when the next correction starts. If it does roll over, then anti-dollar assets like gold is going to really take off, and potentially commodities as well. However, if we do get a flight to, safety and, a market that's moving lower everywhere, then the US dollar might be the only game in town. So we'll see what happens with the US dollar, but still at this key turning point. Cryptocurrency stocks, interestingly, ignited this week on the back of a move higher in Bitcoin. You've got a continuation breakout here. There wasn't good volume in the sector ETF, but across many individual stocks, there was some massive volume. So this reignited as well, closed at the highs of the week. This could be a telltale sign of upcoming dollar weakness as well. So we'll see what happens here, but this is now one of the most powerful sectors again, all of a sudden, coming out of a recent consolidation. The banks remain a major potential problem for this market. They did bounce off the lows and the 30-week moving average last week. However, volume was heavier again to the downside. Across the large major banks, banks like Wells Fargo, Citigroup, Bank of America were all down this week. JP Morgan was barely positive this week. And some of these foreign banks actually were hit pretty hard on volume this week. So this is by no means a bottom potentially here. This could resume lower, next week or over the next couple of weeks and be a major problem for this market, starting to underperform the S&P 500 here. So looking at this is basically the, one of the weakest sectors in the market now. And the major financials, again, look at the underperformance against the S&P 500. Failed to make a higher high last week when the S&P 500 made a higher high. This is a key market to watch going forward over the next couple of weeks. If we get more weakness here, this is a major warning sign. Chinese stocks showed heavy volume again coming out of a recent correction low. These stocks are, have been destroyed, are sold out. So watch for more of a basing process and then potentially a breakout. This sector would definitely benefit from a move lower in the US dollar. So watch for that to be a potential setup this year where if the dollar rolls over into stage 4, foreign stocks start to act better and then potentially break out at some point this year. FXI had monster volume as well. This is the biggest weekly volume in the last 2 years besides a major bottom that occurred in 2022. Finally, the other major problem with this current market is the bond market. You've got now a cluster of heavy volume selling in the long bond, and we're just tapping the key moving averages here. If we break lower, then there could be major problems with higher interest rates again. If you remember back in July 2023, a major breakdown in bonds really kicked off the correction in the stock market. And then once we erupted out of that correction is when we had a major rally in the stock market. So if we break down here, this is going to be a big problem for the stock market. The IEF ETF actually did start breaking below the 10-week moving average this week. However, volume's been kind of average here. But again, you've got kind of a failed breakout here and then a move lower last week. So, potential problems with the bond market, another rollover into another down leg could be a major problem, especially for interest rate sensitive sectors. The automotive sector is already struggling, and that could be a major problem. You can see the home builders are starting to struggle as well. So you can see how these relationships are starting to show up with interest rates starting to move higher again. So overall, you've got artificial intelligence and cryptocurrency heating up again, but you've also got potential problems in banking and bonds. We'll see how this all shakes out, but over the short term, there could be more strength. Over the longer term, a correction continues to get closer and closer.